If you're looking for professional day trading education, high-level trade analysis, and dissection, you, my friends, have come to the right place. My name is Pat Mitchell. I've been a professional day trader for the past 11 years, and I'm here to bring you exactly that. Professional day trading education, all here for free on YouTube and on X. And tonight we're going to be going over a monster short on SPY, taking it down for about 150% and 15 grand, and with very little effort. And I'm going to show you exactly how. So give me one sec, folks. I hope you all are doing well. I am going to fire up these charts. Let's rock and roll. Okay, guys, like I said, I hope you all had a great day. Let's do this. So I think, first of all, let's cover Qs first. So Qs was the first trade that we took. So you need to know a little bit of context here. For those of you that are just joining us, these blue levels represent levels that I strike 30 minutes prior to the market open, sometimes longer. And then I develop trade plans surrounding them. And what you're not going to see is the level struck at pre-market lows. Now, right now, pre-market lows has been working extremely well. I ended up doing about a 30-minute section on a mentoring live class about it. And right now, it's pretty much, I think we're probably at 14 for 14 out of the two SPY and Qs. Now, I'm not talking about a huge run or anything, but you're going to get some sort of a reaction into that level within risk tolerance. And I know that that's a mouthful, but that's what this game is about, right? So on this here, we executed the first trade, and it's going to be kind of difficult to see. And I'll zoom in here in a minute. But we have pre-market lows and then protected by after hours lows. Now, obviously, those levels are not straight that I'm showing you, but as it opens up, it kind of gives a little bit of a pop, sells off into pre-market, or sorry, after hours lows. So execute and start playing with the trade. So multiple entries, paying ourselves on those first pushes, nothing crazy. But on this, once you get disciplined enough that you can enter and pay yourself with no hesitation, you're paying yourself into what I call natural, which is a target, which is a micro technical target. And that would make more sense if you were a member. But with that there, once you kind of prove to yourself that you can do that, then you can trade with size and you can make money on a supposed failed trade, which I did. The trade didn't really work, but I still locked in, and I locked in $2,140 on that. Now, around the same time, what I wanted, and I'm going to fill you in on kind of my mindset and how I worked out kind of the logistics of these trades. So if we open up and we wash, so we don't pop at the market open, but we wash, okay? The first directional pick is down and it finds a level of support, which it did. And that's right at after hours lows. Well, when it bounces, it's going to drive not just Qs up, but it is going to drive SPY up. And you can tell that SPY didn't quite want to go down at the market open. It wanted to come up and test that resistance. That's the trade we want, because that's a true support or true resistance test, a true level test. And what this had is it had some backing. It had the previous close, followed by just above, we had the 9 EMA and 5 EMA as protection. So we're protected in that trade. Now on SPY, let me get the entries here. So on SPY was really nice because it gave multiple opportunities to get involved with this, right? So it gave the first one and it pulled back. It doesn't look like much, but it is. You do realize from entry to lows right here, that's about a point, guys. That's a point, and you're going to get that equals usually about 10, 15, sometimes more % on the option. And that's like that, right? So immediately we're locking in. And now I'm going to zoom in a little bit so then we can see this chart a little bit better. Okay, so just hang tight. So each time it comes up, there's an opportunity, right? So it comes up, execute, pay myself. Pops up, execute, pulls back, pay myself. Now there's one more opportunity in here, and then that's when you start to get the follow through, which we got. We start getting that follow through, and now you're patient with the rest. Now I'm not going to add back in on this, okay? On that wash there, or pop, sorry, I should say. I'm looking at my entries chart. On that pop there, I'm not entering. Now the reason for that is we haven't tested those moving averages. Those moving averages are up there. And sure, there is a lot of overhead resistance, but what we did have on the daily chart, and you could go back through my videos here on this channel, I talk about a rounding effect. And that's what we had with the opening price up. Okay, if you turn your direction to this daily chart now, which are the blue charts on the left-hand side, okay? So on that there, I'm going to clean up this chart where we opened, okay? We have a low, lower low, now a higher low. It's rounding. When you have a rounding effect, usually what happens is you want those moving averages up higher because it'll give you a better target. But we still had those moving averages in and around this area. That might be a little bit high, but I'm just trying to show you that there was movement there. There's money on the table for us to take. So when I'm shorting something, I see that as a potential threat. So I'm going to get my money in. Right? I'm still going to execute that trade, had lots of executions, already paid myself, and I've already locked in. Once that trade washes like this, I don't want to continue to add back in when there is risk of a squeeze. Now, you could do that, sure, and you could size down, but it's about locking in. Now, a lot of people forget when they are just getting into trading that sometimes it's hard to see from a professional trader's standpoint because that professional trader, he or she is trading in order to pay the bills, keep the roof over the head, keep up the lifestyle that he or she lives. Okay. You're not just building an account. You've already done that. And you need to lock in. Your family rely on you. Okay. So the weight's on your shoulders to do things right. That's why we need to think about risk. And sometimes I understand when you're just starting out, you're not thinking about being a full-time professional trader. You're simply just trying to get your shit together and get your feet under you, right? But that's why I'll see people say things like, oh, that was such a clear short. Why didn't you take that? And it's like, yeah, but what a lot of people miss, literally every time somebody makes that comment, I could point out where they would fuck up because of risk. They're not thinking about risk. See, a professional trader always thinks about risk. Why? Because that is literally the only thing that you can control as a trader. So if we have risk and we enter here and we've already locked in with the best possible entries, you already got the best possible entries. With the position sizing that I have, I'm going to be able to hold some for a low target into that 20 SMA on the daily. That was my low target. Okay. So that's what I did. I don't need to enter again. I don't need to take every single fucking opportunity that the market gives me. You don't need to do that. You simply take the opportunities until it reaches a point where it no longer becomes acceptable to do so from a risk standpoint. If you've already locked in, you never would want to risk that money going back into the market. Now, a little bit of drawdown or whittle back of your P&L is completely fine. That's acceptable. But if you have the potential to go red in that position, that's the cardinal sin. Don't ever, ever, ever turn a beautiful green trade or green day red. If you do that, you're not going to have any longevity in this game at all. Right? Because you're not thinking about risk. And that's what really all this boils down to. So on this position, I still had some. And I just simply worked it all the way down. Now if you take a look at my entry or my exits here, okay, you're going to see those upper exits. Once you start getting into this area, and this area, those are specific targets. So where I'm paying myself is in this area, and then I save some all the way down here for the 20 SMA and this previous range high, okay, which is an important level. And that's exactly where I took it off. As soon as it started coming down into that, it was within a few pennies. I paid myself, and that was it. So I locked in $14,390 on that trade with very minimal effort, very easy, all prepared beforehand. Nothing came out of the blue. I'm always prepared. In fact, I have a video that's going to be released this Sunday, Sunday evening around 7 p.m. And it's going to basically be giving you the 10 commandments to execute and get prepared for a trade. Basically, what to do before you execute a trade. It's going to tell you exactly how to prepare step by step from a professional trader's standpoint. And you're going to want to watch it. So make sure you guys stay tuned for that. And if you want to come learn from a professional trader that's been doing this a long time and can actually teach you how to get there and has multiple strategies, not just an exit or an entry strategy, sizing strategy, risk strategy, management strategy, you name it, come to tricktrades.com. And if not, you want to keep going the free route, you're going to find out the hard way. That's a real hard way to go about things, but that's up to you. That's not my decision. That is your decision. And that's why there are 1,000 free videos on my channel. So make sure you use them. Okay, guys, I hope you all have a wonderful evening. I'm going to eat some food because I am starving. Have a great evening. Adios, guys.